It's Financial Literacy Month, and we're recapping the juice from our 2 wealth building series. Stay tuned.
It's time for Tip Tuesdays with Dr. Shanna Grant.
So in this video, I'm going to recap the last 2 wealth building series, videos that we did so far to promote the book, A Toolkit for Raising Wealthy Kids. Now, in this first series, we had Ulysses McKee and Melody Williams, who are experts on the stock market. Well, they're investors in the stock market and they're doing really well, so that makes them experts. Now, in this series, Ulysses gave us some tips, also did Melody. And so some of the few tips that we got as it relates to starting investing in the stock market is retirement is not an age, it's a number, right? Everyone has a number, and that number is different according to your lifestyle. And when we say a number, we're referring to how much money will you need once you retire. And that means to keep up your lifestyle, to, let's say, pay off your mortgage and those type of things, right? So everyone's number is different. Now, Melody mentioned that you need to make sure that if you do have access to a 401k, you want to add in that 401k into your portfolio, meaning do the max if you can, right? If you can't, do the minimum at least so that you're getting that free money that's matched by your work, right? Also, if you buy stocks, if you're a newbie and you're buying stocks, don't buy and sell. You want to hold those stocks for at least 5 years, okay? Now, Ulysses also mentioned that she started investing with only $20 per month. $10 every 2 weeks. So yes, you do not have to have $1 million to start investing. You can start where you are. Now, it's important that before you invest, what you need to do is you need to do your research. Education and research is going to be very important as it relates to investing. Now, you may say, what am I supposed to be looking for when I do my research? Well, you need to be looking for the top company in their respective industry. Melody gave us an example. If you have BJ's, Walmart, and those type of things, you want to look at which one is the number one company in that sector, right? You want to also look at the balance sheet of the companies. You want to make sure that their financials are looking good and they're looking prosperous, right? You want to look at the CEOs, right? This is very important. Are they experienced? Have they been in the company for a while? What are they doing with the company? Need to know what the CEOs are doing. Ulysses mentioned she looked for international exposure and plans for the future, right? How are they going to be diversifying, right? And as I say diversifying, you have to look at also companies that diversify their income, right? Meaning they make income in different ways. And so if in one way, for instance, let's say Amazon, the example we gave, Amazon makes money by being a distributor, by selling items on Amazon. They have Amazon Prime, music, and all these things, right? And so what this means is they're very diverse in how they make their money. And so if one sector falls, they're still good because what? They have multiple ways to make their money. Now I'm going to wrap this up to say some of the secrets that were mentioned in this video were that you should look at the president's speech. Well, not look at, but listen to the president's speech when he is, or she, we're in the 21st century. Look at the president's speech, right? Or listen to the president's speech so that you can get hints on what is important to the president's cabinet and what they're going to be pushing. And whatever agenda they're pushing, they're going to be pushing funds there too, especially to where the top companies. Melody mentioned you want to make sure you look into military, right? America is big on the military. So those companies that makes artillery are going to be very much funded. You also want to make sure you're looking at pharmaceutical companies because we're sick people, as Melody said. And that means that the government is going to make sure that these companies are afloat, okay? And the last tip that we got was dividend stocks. Definitely want to make sure you're investing in dividend stocks because these are the stocks that will be paying you double. They pay when the stock market goes up, and they also pay when they give out their quarterly earnings. Okay, so you want to make sure you're looking into that. Now let's dive into the series we had on life insurance, right? And so this segment, we talked about using life insurance to build wealth, and we had Miss Sue Shaw and Nadine Ellis to come on, who are licensed financial professionals. Now, we started the segment where Sue mentioned that life insurance, she sees it as a gift. How to build wealth, or how to build your wealth portfolio and retirement portfolio. So this is a gift to yourself, right? And then she also mentioned this is also a gift to your kids, right? To buy their first house, to buy their first car, to pay their college tuition. So it's a gift all around. Okay. We discussed that life insurance is not only for a death benefit, it has a living benefit. Well, not many living benefits as well. These include disability, long-term care, critical illness care, collateral assignment, and it goes on. Now, we want to talk a little bit about the collateral assignment. And so what this means is you can go, let's say, to a bank and you can say, hey, I need a loan for, I don't know, whatever, 20,000 or something. And you can say, well, I'm worth $500,000 because I have life insurance, or I'm worth $1 million, whatever the price is, whatever your insurance policy face value is, that's what you're worth. And so this means the loan companies may be a little bit more lenient towards giving you that loan if you have the good credit and those things that you need, of course. But this is one thing that will be guaranteed to pay off your loan once you pass, right? We talked about, as a mom, you want to make sure you're putting a lot of money in your insurance policy because you never know when you may need this money for your child. For instance, Nadine mentioned she had a personal experience where she had to pull cash, right? But she didn't have any hassle from the bank. She said she needed her money and she needed it now. And so she was able to get that, right? And this is without any hassle from the bank, paperwork or anything. She went in, I need my money, and she got it, okay? Now, parents, you can get life insurance for your child as young as 15 days old, okay? And then you can get this at a lower price because they're so young. So their premium will be cheaper than it would be if they were older. And let me tell you, compound interest is going to blow up that premium, right? Well, not the premium, but that value of the life insurance or that profit over time. Because if you're thinking about 15 days old to 18 years old, so that's like 18 years of compound interest building wealth. Get into it. Okay. Now, one of the things that we emphasized in this segment is that the 529 plan that's very popular for college preparation, for your tuition, for your child's future, it's very restrictive and it has a lot of penalties, right? One, in fact, is you will have to pay a penalty if your child gets a scholarship, right? This was deep for me because this is why I said, no, I'm not doing that. Right? So you want to look into the life insurance because there is no penalty in taking out your money. Well, of course, dependent. You have to have your financial professional or advisor to kind of give you the ins of that. Right? And now, unlike your 401k, this is very important, and other savings, the life insurance plan does not, I repeat, does not dip below what you put in, right? And so the least you can make for your life insurance is 0%. So unlike the stock market or your 401k plan that dips with the stock market, your life insurance does not, or the benefits or the increase that you get does not dip. Very important. We also want to touch that this was very big for Nadine. Tax advantage, right? Tax advantage for your life insurance. You have the tax advantage bucket, which is your HSA, your Roth accounts, and those things. But the life insurance is the best. That wraps up this recap. Stay tuned for our upcoming segments on real estate, entrepreneurship, and trusts.